Hello, everyone. Thanks for joining today's webinar and appreciate the FBMA and all what they do. We've been part of the FBMA as a preferred provider for payment processing for over 10 years, so we're glad to be part of this. Today, I'm going to be going over just a few tips and some from my 30 years experience. I just want to share with you guys some of the things to look out for with credit card processing, how this can help you save money, watch out, best practices and things like that. So we'll get started. First thing I wanted to kind of give you guys some tips on is pricing. A lot of people merchants get caught up on the percentage, the per items, the monthly fees, all this. And I'm not saying they're not important, but it's hard to kind of gauge really your true pricing when you try and do line items. It's easy for processors to give you a low, rate over here, but they increase it over somewhere else. So the best way for you to really gauge what you're processing at and your rate is called what we call the effective rate. So basically, you take your total fees for the month and you divide it into your total volume, and that's going to give you an effective rate. And you can see here from this example, this merchant is the effective rate is 2.91%. So basically, that is a kind of a reference point. Each month you do this, it's going to vary a couple basis points, but overall it should be around the same pricing. Now, if one month all of a sudden you see it go up to 3%, 3.2%, there's some kind of increase or something's wrong. And even if it drops significantly, that's good, but there could be something wrong that you may want to investigate. But that's the best way to kind of gauge and keep your processor honest. And that way you kind of do the review every month and you're kind of watching over and you don't have to get the line items. So don't get caught up in the per items and other miscellaneous fees. Depending on your business type, you really want to be under 3%. B2B, which most of you guys are, you're going to be closer to that 3% just because there's business cards involved. But, overall, you should definitely be under 3%. To help stay under 3%, there's level 2 and level 3. Especially in the B2B world, you want to take advantage of this. You want to make sure your processor's not charging you a flat rate because you can't take advantage of it if you're under a flat rate. You have to be under what we call interchange plus pricing. So passing over your sales tax and a customer code or invoice number, those things all go to the processor. They check boxes basically and kick back a better interchange rate. Better interchange rate is like 1.9% versus 2.85 if you didn't put the information in there. So it's a big difference if you don't or if you're not utilizing level 2 and 3. Level 3, same thing. It's for more larger ticket items. They want to know what freight amount is, shipping from, zip codes. You just need to make sure your software is able to gather that information and send it over. And if it does, it's going to get you better rates. So the benefits of level 2, level 3, it's just lower costs through reduced interchange fees, enhanced transactions, better transparency, better reporting for you, and also better risk and chargebacks due to detailed information that you're getting from the customer. In April, there's going to be some changes to level 2, level 3. They're basically combining it, and it's just going to be level 3 now, but it's going to be kind of the same thing where you got to send over the information. So make sure your current processor is sending over the correct information of what you need to do to qualify for this new updated pricing that Visa's sending over. It takes effect April 1st. Here's some examples of level 2, level 3 pricing. So it's like, if you do this, this is what you get. So like a MasterCard business card, if you just run it as a business card, it's 2.65%. But if you're able to get level 2 and level 3, you can drop it down to 2.2 and 1.8%. So this is a good little quick reference guide. Visa publishes their rates online, so you can Google it and actually see true interchange. But you definitely want to make sure you're educated with your processor that you're doing everything you can to get these rates. Another big change in the industry is everyone's starting to pass the fee on to the or to the customer. In a face-to-face world, there's certain rules and regulations, and online transactions or over phone or invoicing, there's certain rules. When you're using invoicing, e-commerce, online payments, or even a phone order, you can charge whatever you want for processing fees. You just have to disclose it to your customer. So if you wanted to charge a 3% credit card processing fee, you got to make sure it's there on your invoice and it shows when they sign or able to sign the invoice, or at least it's displayed. So it protects you that you've notified them that this charge is happening and you're able to do it. And that way you're able to pass the fee on to the customer. And now you're basically taking credit cards at no cost. In person, there's two different ways to do it. Surcharge is, depending on your state, some states don't allow surcharging. You're able to charge up to 3% max, and it's basically only on credit cards. Debit cards are excluded. So, make sure you check with your local regulations to see if surcharging is available. In Florida, it is okay to do surcharging. Most cases, and for my merchants in our company, we usually don't do surcharging. We do the cash discount or dual pricing. So what that allows you to do is basically up to 4%, and it includes debit cards. So long as you're displaying it or on the receipt that it's displayed that you're charging this fee and the customer's aware of it, you're able to do it. You're basically just offering, hey, my cash price is X and my credit card price is Y. As long as you display it, you can go up to 4%, cover all your fees, and it's allowed in all 50 states. And long as you're displaying the information, like the sign here we have in this displayed, you're okay to do it. So quick tip, if you add a fee listed on to the listed price, it's a surcharge. But if you subtract the fee from cash discount, it's a cash discount. Now what's coming along is dual pricing with face-to-face. Some of these terminals now show cash and credit price. And so that makes it even more legal in Visa's eyes. They like it seen that way. All right, understanding fraud. Here's some key concepts and some preventions. Fraud can take many forms, pose a serious risk to your business and customers. Common types of fraud is identity theft, phishing, and card skimming. Identity theft is a big one, especially in the B2B world. I've seen where there's some large transactions gone through. You go ship the order or deliver the order and it's gone to a fake address, but you've already paid for it with someone's stolen card. So now you've, lost product and you're getting a charge back. Some of the things that I recommend doing with that is making sure if you don't know the customer, you always check IDs. So, impact of business, obviously financial losses. If you have too many chargebacks, Visa can actually shut you down. And obviously if you start getting too many, you're going to get reputational and customer distrust, increased processing fees, and potential legal consequences. So, basically, if you don't know your customer's large transaction, I always recommend, checking. And here's some of the measures you can do. Always check ID. If it's a keyed in transaction or invoice, you say, hey, I'm going to send you over an invoice. You're a first time customer. Can you please share your ID that matches the credit card that you're using? AVS, CVV, basically you're going to ask for their zip code and the first, the numbers of their street address. It needs to match. If it doesn't match, your system should kick it back as a decline or a notification. So you can go back to the customer saying, hey, your address is not matching up to the credit card. Could be fraud, or B, oh, yep, I moved. I got a new credit card address. Here it is. And then it goes through. But that is a good way to protect yourself against fraud. So a lot of times, like you said, each business is different depending on your average ticket, your customer base. So, set some things in-house to where it's like, anything over this amount, $3,000, for example, we always check ID. I have to have a physical ID that matches the credit card, or you check, the address before, they ship out any kind of product. Those are just some good ways to help you against fraud. If you're a larger business and you're getting, fraud's happening quite often, Count is a good solution that can be used to pre-identify fraud before it even happens. So that's a good customer. They're owned by actually Equifax. So I recommend them if you need a fraud prevention tool. There's just some best practices again on chargeback, prioritizing payment security, utilizing the CVV AVS is very, very important. clear policies with your staff, making sure it's like if it's over a certain amount, they check IDs, check addresses, avoid vague content. If someone's complaining that they have to give over their driver's license or certain information, probably it's fraud. So, that's it. Just wanted to wrap up. We appreciate it. Some of our services are just, we're a payment solution company. We own web design platform. We have point of sale, B2B solutions, marketing, and nonprofit solution. So anything that we can do to help any FBMA members, we would love to help you. Part of our proceeds from this goes back to the FBMA to help them keep their cause going. So just know that that's part of our relationship.